Kenyans are already facing a double-digit inflation as the cost of living continues to rise in the wake of the energy crisis. The high cost of fuel that led to the adjustment of energy tariffs by 24% over the last 3 months is simply not sustainable in a developing economy. Apart from the local consumers, the manufacturing sector, that is a key player in the realization of the 2030 vision, is reeling under the impact of high energy costs. A tour of the companies at the industrial area proved to be very revealing. Although owners of the various companies refused to comment on camera for fear of victimization, they told us that if the situation does not change in the next 2 weeks, most of them will be forced to close down or relocate to other countries. We got a copy of an electricity bill belonging to Tetkak Company. In July, the electricity bill stood at 1,051,605 shillings with a fuel cost of 218,860 shillings, an amount they claim is double what they paid in the first months of this year. But worse was to come when they received last month's bill, for it stood at a staggering 2.5 million shillings, with a fuel cost of 1,089,573 shillings. Analysts are advising the government to reduce the fuel cost charges power bills from 7 shillings per kilowatt to 2 shillings and 50 cents per kilowatt.
The stations that I've mentioned, which are in the remote stations, uses heavy diesel. This diesel, when it is being bought by the companies affected, they buy them in dollars. One of the aspects that affects their pricing at home is the exchange rate. If the shilling weakens, that means they are not able to recoup their investments in terms of fuel, and that is why the bills have been going up.
However, some oil pumps are yet to reduce the price of fuel. But a spot check conducted by Citizen TV in Nairobi reveals that oil pumps on roads that lead to palatial estates are yet to comply with the government's directive.
Kuna shida kwa maana bei yake iko juu sana. Na tena wenye station kupandisha wanapandisha haraka. Akiambiwa kushukisha bei hawashukishi haraka. Wanashukisha shilingi moja moja. Sasa unakuta gari kama hii. Unatembea safari kama ya Mombasa yenye mnalipa transport. Unakuta mafuta yote ndio inaenda kwa mafuta. Sasa hakuna faida tunapata.
Hata mambo ya stima wametufinya sana, lakini sasa hivi tunaomba tu God ituelimishe tu.
Private oil pumps are, however, making a killing due to the low prices that stand at 96 shillings per litre in some places. During the recent energy conference in Nairobi, President Kibaki announced diversification into alternative sources with 4.5 billion shillings already set aside for geothermal generation. One argument doing the rounds is that energy costs may not go down, given that the Grand Coalition government needs funds to support the bloated cabinet. Prices of oil in the global market has dropped from $147 a barrel to $90 a barrel. But as we know, oil companies take long or never to pass benefits of lower fuel prices to consumers. The traffic menace has also been cited as a catalyst for the high cost of living. Now, even as the government strategizes on how to cut down the cost of living in the country by reducing the fuel prices, some of the pending issues is like the construction of new roads. Now, the number of manpower wasted, the fuel wasted in traffic snarl-ups might finally reflect negatively in the country's economic growth. Chris Dairu, reporting for Citizen TV, Nairobi.